Hello guys, this is Punit. I'm a price action trader. I trade E-mini contracts and micro E-mini contracts. I usually trade 2000 tick chart and I scalp on that chart. If I want to swing, I come to the 1 minute time frame chart. And today we have Shushmita joining us. She is my friend and also my student. And so what we are going to do is I'll be taking you through the 1 minute time frame chart bar by bar while explaining all the high probability setups. And Shushmita will be asking any doubts if she has any. The same goes to you guys. If you do have any questions or doubts, please do ask me. Leave that question in the comment down below and I'll get to it as soon as possible. So, also, if you are interested in such educational videos, I will leave a link below to a playlist where I have done this for, I guess, 4 or 5 more videos. Okay, guys, let's get to it then. So, hello Shushmita, I didn't hear you responding. This is 1 minute time frame chart, and if you see here, yesterday's closing was here. Today we opened all the way down here. So, like I have explained to you before, EMA will act as magnet. So will the yesterday's closing. What do I mean by magnet? The price will be pulling towards the magnet, or magnet will pull the price towards itself. First bar of the day on 1 minute time frame was a strong closing bull bar. So can you go long one tick above this bar and hope for a scalp up? You can. But if you see, the second follow through bar was a big bearish bar closing on slow. And the price didn't go one tick above this bar. So you never met the entry criteria.
Yeah, correct.
You can enter one tick above this bar, hope for a scalp up. It did trigger, but then it failed. It happens. Now, if you see, almost 7 bars inside this range. First bar was a bull bar, second bar was a bear bar, again a bull bar, bear bar. So whoever wants to trade this will be confused whether to go long or short. So confusion is a hallmark of trading range. Now again, if you see, this bar broke down very strongly and it closed strongly too. But that said, all these magnets above, the EMA is a magnet, yesterday's closing is a magnet, yesterday's high is a magnet. And if you see, there is a price junction here which can act as support. So all those magnets uh, will help price to move higher rather than lower. So I don't want to take this trade on the short side. And the follow through bar was a big here reversal bar. Can you take a short entry here? You can, but I wouldn't for the same reasons which I just told you. Okay, now if you see 4 consecutive bear bars closing near their lows, this is behaving extremely right. Why? Because if this was a strong bearish trend, price wouldn't be trying to go higher once, twice, and now again maybe a third time. Yeah. So when price tries to do something against the trend thrice, it will usually be forming a wedge pattern. What is a wedge pattern? It's nothing but a channel which is converging in nature. If I draw this as a channel, you can see that the prices have been converging in nature. So this is extreme behavior already. When the price is in a wedge, it's already signifying extreme behavior. Extreme behavior means this is a bear trend, and bear trend is being extreme in nature. Once it does something thrice against the bear trend, you can expect a reversal up either to the beginning of the channel high or test of EMA or day's high. So let's see what all profit targets get hit. Also, when you enter, you have to enter one tick above this bull bar, put your stop loss one tick below this bull bar. And since wedges have high probability of success, 70 to 75% of the time they'll give you a scalp trade. It's better to scalp out if you want to 1:1 risk to reward. You can scalp out at 1:1 risk to reward. 70 to 75% of the time they'll give you a 1:1 risk to reward scalp. So you can either scalp out or wait for this target to be met, which is the wedge channel starting point or origin point, or wait for a test of EMA because that is a magnet. Okay. Like I said to you before, magnets usually pull the price towards themselves. But once they pull the price towards themselves, usually you will have to wait and see what it does, whether it will support the price or resist the price. So now you're entering on the long side here. Once it reaches the EMA or the magnet, which is the EMA, it can either be giving you a setup on the short side, signifying that EMA is acting as a resistance, or it can break above the EMA strongly and then give you a setup on the long side, signifying that yes, the EMA is acting as a support.
Support.
Since we don't know
Yeah.
what it will do, it's best to scalp out near the EMA. I mean, exit at the EMA.
Yeah.
Oh, there is one more possibility which can occur. It can just go to a trading range there, and okay. So now we get four follow through bars, test of EMA. Okay, now if you see, this is what I meant. Huge reversal after test of EMA. Also, it almost touched the day high. This target was also met. Now if you see, this is big down, big up, big confusion again. You don't know whether you want to trade on the long side or the short side. So this is again characteristics of a trading range.
Trading range.
So in trading ranges, you will find short entries on the top third region and long entries on the bottom third region. So can you go short one tick below this bar and hope for a scalp down? You can. This bull bar. Price
Yeah.
tried to move lower within that bar. If you go to 10-second time frame, 15-second time frame, or 30-second time frame, you could see that happening. And then it again went up and closed strongly. So this was the first attempt to move over.
Yeah.
Price went higher. This is the second attempt to move lower. So this is again a micro double top. Here it was a micro double bottom. It was a micro double top as well as a micro double bottom. Here it's a micro double top now. Why didn't we go short here? The same reason. Huge gap down. All these magnets will try to pull the price towards themselves. So it's better to wait for a test of EMA and then go on find a short setup. So you can go short one tick below this bar, put your stop loss here. But then next bar, if you see, it was a bear doji bar. It didn't trigger the entry. So you can place your entry one tick below this bar, put your stop loss here or here, hope for a scalp down. Also, if you see this bear doji bar is inside this big bar. What do I mean by inside? This entire bar range is within this bar's range. So this is an inside pattern. Inside pattern will also act as a second entry. Second entries are just that if you, like I explained to you in the wedge bottom, if you see a price try to do something once, twice, and thrice, the same thing goes to the second entry. Price is doing something against the trend twice. So inside bar will act as like second entry. You were asking something?
No, nothing.
Yeah, so you can enter one tick below this bar, put your stop loss here or here, and hope for a scalp down. Why scalp down and not a swing trade? This is a trading range behavior. So you can only scalp within the trading range. Also, I missed this point. Price is rejecting twice in the same level here, price level here. So this is acting as double top. Okay, the difference between double top and micro double top is, suppose you have less than 8 bars within the double top region, you will call that as micro double top. Micro double tops are not that very significant alone. You have to match it with something else. Here, this micro double top is testing EMA and it's rejecting from EMA, also double top. So that micro double top has significance. If somewhat the price didn't touch the EMA and it didn't even reach this level, and somewhere here you got double top, micro double top, that wouldn't be much significant now. Why? Because it's a small pattern. Maybe it's significant on a smaller time frame, maybe 2 seconds, 3 seconds chart, but on a 1 minute time frame chart, it's not all that significant. You have to find multiple coincidences occurring at the same price level.
Okay.
Okay, now this triggered your entry, and if you see, it reached the 1:1 risk to reward. Those who put their stop loss here, they would exit at 1:1 risk to reward somewhere here.
Yeah, correct.
Okay, now if you see here, price tried to do something against the bears once. This is the second attempt. In this bar, if you see, it tried to move higher and then reversed. So on a smaller time frame, this would have been the third attempt.
Yeah.
As the wedge bottom again, you need an entry bar. So this is a strong closing bull bar. Also, it's reversing from day's low. So if I draw the trading range as somewhat this, and this was this bar where you can see the crosses.
Yeah, I can see.
Yeah, it broke below the trading range strongly, but but then you see this strong reversal bar. Why this is happening is because markets have inertia. Suppose the markets have been in a trading range, it will like to remain in that trading range 80% of the time. Only 20% of the breakouts succeed. Suppose the market is in a strong bull trend, it will try to remain in that strong bull trend 80% of the time.
Oh, yeah, correct. It's like yesterday we saw it was a bearish, no, bullish trend, right?
Yeah,
Most of
so
the
yeah,
time. Today's it's like a somewhat trading range.
exactly. Prices will try to remain within the trading range. Yes, this was a strong breakout, but what is the context? Trading range. And this bear leg down has three pushes up on the upside. So this is also acting as a wedge bottom. Also, this is a double bottom and a failed breakout of the trading range. So can you enter one tick above this bar? You can put your stop loss below this bar's low and hope for a scalp up. Why scalp up again is because it's a trading range. You only scalp within the trading range. You never swing. Okay, the difference between a scalp and a swing is
Hmm?
if you're aiming for a 1 is to 1 risk to reward, then it's a scalp. If you're aiming for more than 2 is to 1 risk to reward, then it's a swing.
Okay, okay.
You entered here on this bar, but if you see, it's not a very strong closing bull bar. It's actually a doji bear bar, and the next bar was an inside bar again. So this is signifying that bulls are not that strong, right? And
Yeah,
also, if you're scalping here, sorry for that. If you're scalping here and you enter one tick above this bull bar, put your stop loss here. This is your protective stop loss. What do I mean by protective stop loss? You're giving market enough room to prove you wrong or to prove you right. Suppose
okay.
this is $100 mark is where you entered and this is $90, the low of this bar. You're risking $10. That is your protective stop loss or your risk amount, initial risk amount.
Yeah,
Now you see a bad follow through bar and it is also a doji bar. So when you're scalping, you can move your stop loss from here to here. If you're a new trader, it's better to keep it here and let the market do its thing. But I usually put my stop loss, I raise my stop loss from this point to this point. Let's say this bar's low is at $95 mark. So now you moved your stop loss from 90 to 95, which means you have reduced your risk by $5.
$5.
Yeah, and since you entered, this was the deepest pullback it experienced. That was the maximum drawdown you experienced. So minus
Yeah.
$5. Now, since you placed your stop loss here, that means you're risking $5. And since you're scalping, you can exit at multiples of $5. It's better to exit at $10 profit target. Or
Okay.
if you're good enough to know what's happening, you can risk the entire $10 and exit there for a scalp without moving the stop loss, or you exit at $5 profit. Why? Because your actual risk was only 5. You made your scalp profit there. Why I told you this is because,
Hmm.
see, if I mark a measure move up, you entered here, you put your stop loss here, the price has to reach all the way here to give you 1 is to
Yeah,
1 risk to reward. But what is
yeah,
happening? EMA is catching up to this.
yeah, correct.
Since EMA is below your profit target,
Hmm.
it's better to scalp out at the test of EMA or you exit based on the actual risk amount. The actual risk was $5, so you exit at $105.
Okay, just near it.
Yeah, scalp doesn't necessarily mean that you exit every time at 1 is to 1 risk to reward. At times you should be exiting at a small loss, at times you should be exiting at a small profit.
Yeah. Okay.
Just because the win rate is high doesn't mean that you'll make money all the time. You'll have to manage so that you'll end up on the profit side if you take like 10 trades or 5 trades. Strong bear leg. Okay, not very strong, but a decent enough bear leg. This was first attempt to go lower, and this is the second attempt to go lower. So this is a pullback structure. You can short one tick below this bar, put your stop loss here. But what's happening? What is the context here? Is it a strong bear trend or is it in a trading range price action?
Trading range.
Yeah, so what do you do in the bottom third region of the trading range? You will only find the long setups and
Long.
ignore all the short setups. Now, if you see, this bar is again giving a second entry. This was the first entry, this is the second entry. So, if you want, you can go long here, put your stop loss here, and hope for a scalp up. But then again, price hasn't been very supportive. Rather,
Yeah,
sorry,
yeah.
EMA is acting as a resistance rather than supporting. So, be careful when you do that. The stop loss got hit, you can, it happens, you can do anything. Okay, now again, if you see, this is first attempt to go higher, second attempt to go higher, this is the third attempt to go higher. Now, wedge bottom, trading range bottom, third region, test of EMA, again one more wedge bottom. This
Yeah.
leg got a second leg. Leg 1, pull back, leg 2.
Leg 2, yes.
Yeah, why is this leg 1 pullback leg 2 important? Market always moves in two legs. If you get a strong bull breakout, it will take a pause. That pause will be called as pullback and then a
Pull
breakout
back.
again.
Yeah.
And then after the second leg has been completed, usually the pullback will be much deeper.
Yeah.
Okay, so now if you see leg 1 pullback, leg 2 has been completed, also multiple wedge bottoms and also bottom third region of the trading range, and this is also acting as a wedge bottom. Price tried to do something against bears once, twice, and this is the third time. So this is a high probability setup. Why? Multiple wedge bottoms are occurring, that is increasing the odds of success for reversal setup. So you enter one tick above this bar, put your stop loss here or here, and hope for a scalp, or you exit at wedge channels top.
Okay.
If you see it did reach there. Okay, the actual risk concept again. If you put your stop loss here and you just move the stop loss to here, you would exit at the EMA. If you're
Correct.
placing your stop loss here only and
Yeah.
hoping for a scalp of 1:1 risk to reward, you'll not exit here. Your stop loss will be here. Once it hits the target, that is where you exit. Okay. This was a strong breakout above the EMA.
Yeah.
And if I have to draw a channel, let me just erase all the other drawings because it's cluttering
Yeah.
and it's hard to see. Okay. This is a channel line if I have to draw one. This is another channel line. And what did I teach you about major trend reversal yesterday? If you can draw a trend channel line and the price is breaking above the trend channel line, this is a bear trend channel.
Overhead or over something, right?
Overshot, that is different concept. Let me just revise that to you again. So this is a bear trend. This leg is a bear trend. If you draw a channel line, this is a channel line. The price has to move above the channel line
Yeah.
and close strongly and attempt a test of this low and then give you a major trend reversal. Why do I call that attempt a major trend reversal? Is because this is a bear channel line. So if the price has to remain in a lower high, lower low structure or go
Yeah.
lower, it shouldn't be breaking the trend channel line. Why? Because once it breaks the trend channel line, it is signifying to you that, hey, I'm going to change my characteristics from bear channel to either a trading range or a reversal, or maybe I'll just trap you and go lower.
Yeah.
So the odds of success for the bears will be reducing then. Okay, now if you see, this is a tight channel.
Yeah.
It is breaking above the trend line. But then if you see, the breakout is not that strong. Strong breakout bar, weak follow through, inside bar, again a strong closing bar, then a reversal bar. So is this a strong breakout of this channel or a weak breakout of this channel? Weak, right? So now let's draw this channel line. If we see this breakout leg,
Yeah.
the 7 bar consecutive breakout bar, it is breaking above this trend line and it is also breaking above the EMA. Also, it is breaking strongly with good follow through bars. And one more point to notice is you have 1, 2, 3, 4, 5 bars closing entirely above the EMA. What has been the trend majorly? Yes, it has been a trading range, but it's also trending trading range. The trading range has been making lower high, lower lows. So it's a
Yeah.
trading range. It's a new concept for you, but just keep that term in mind.
Okay.
Yeah, so now it has met all the criteria. It has a strong breakout above the trend channel line. It is closing above the EMA. You have 5 or 4 moving average gap bars. What I mean by gap bars, see, this is the low of this bar. This is where the EMA is. There is a gap between the low of this bar and the EMA.
Yeah.
Once you have such gaps, you call it moving average gap bars.
Okay. Moving.
That is signifying strength for bulls. He doesn't even want to test the EMA. That is how strong they are right now.
Okay.
Okay, now if you see, price tested the EMA now here. This is the first attempt to go higher. This is the second attempt to go higher. But that said, this is also a major trend reversal, right? What is a
Yeah.
major trend reversal? Here, the major trend was bearish in nature.
Mm.
This minor reversal, bull leg. Why do I call
Yeah.
this minor reversal? The major trend has been bearish in nature. So the first attempt to do anything against the major trend will be minor. So
Yeah.
I will call this leg as minor breakout or minor reversal attempt. Once you get a strong minor reversal attempt, price has to retest the prior lows before giving you a major trend reversal attempt. Okay, yesterday I told you that major trend reversals have a low probability of success, so you only swing trade those. 30 to 40% of the time only it will work out and give you a 2 is to 1 risk to reward or higher.
Yeah.
But now I'm telling, since it's a deep pullback, also it's been in a trading range. We are still in a trading range. If you see, if I have to mark one more trading range,
Yeah, it is
we are
again
still
at
in a
the.
trading range, right? Big up, big down, confusion. And this is not a very strong breakout above this trading range. If I mark this as the trading range, this bar didn't last very long. It again reversed. That said, we are still in a broader trading range.
Yeah.
So you can enter on one tick above this bar, put your stop loss here, and hope for a scalp up. Okay,
Okay.
scalps usually should have at least 60% win rate, right?
Yeah.
So since this is the bottom third range of the trading range,
Mm.
it
Yes.
usually reverses 80% of the time on the upside if you find a trade on the bottom third region. So this is a high probability trade for a scalp trade, not for a swing trade. Why? Because
Huh.
swing trades won't work usually in a trading range.
Okay. Okay. Only scan.
Yeah, because see, when once it reaches the top third region, price usually tries to reverse down again.
Yeah.
So you can't be swinging for a long here. You got your scalp up. Okay, now again, if you see, price tried to do something against the bulls once, twice, and this is the third attempt. So wedge top. Also, if I have to mark one more wedge pattern line,
Mm.
let me just delete all this.
Yeah.
Okay, first attempt to go lower, second attempt to go lower. This is the third attempt. So this is one more wedge top pattern.
Yeah.
Since this is multiple occurrences on the same at the same point, you call this as wedge nested wedge top. It just increases the odd. Previously, I told that 70 to 75% of the time you'll get a win if you trade the wedge bottom or wedge top. Here, it's probably 80 to 85% of the time you'll get your profits.
Yeah.
Okay, you'll enter one tick below this bar low and put your stop loss here or here and hope for a scalp down. Remember, we are still in a trading range. That is why this is a scalp trade only. Once it reaches this bottom third region of this trading range again,
Huh.
prices will try to move higher, right? So
Yes.
be aware of that. Also, if I have to draw a channel here,
Yeah.
this is a broad bear channel.
Yeah.
What have I taught you about broad bear channels? You can find trades both on the short side and on the long side. You found multiple trades on the bottom third region of the channel. You found
Yeah.
one trade on the top third region of the channel, broad bear
Channel.
channel. So broad bear channel is nothing but a trading range which is making lower high, lower lows. So you can trade on the both sides.
Okay.
Yeah, you just trade it like a trading range. What is happening here again? Once you have identified this to be a trending trading range channel, which is bearish in nature,
Yeah.
you know that the price will bounce at the channel lengths.
Correct. Yeah.
So here, if you see a strong breakout, pullback structure is happening. Price tried to do go lower once, and this is the second attempt. So you can go short here, put your stop loss here, and hope for a test of this channel line.
Correct. Yeah.
It almost
Now it
touched the
might
channel
go
line.
high.
Sorry.
Now it might go higher. Yeah.
Yeah, I move the cursor a bit faster, I guess. Okay, now if you see leg one, pull back, leg two. And in the leg two, if you see, first attempt to go higher, second attempt to go higher, third attempt to go higher, also close to the bottom third region of the channel line,
Yeah.
also forming a double bottom here. Price tried to do something against the bears here once, and this might be the second attempt. If you don't want to go high, go long, one tick above this high, you can wait for a second entry. You got your second entry here.
Yeah.
You go long there, and here you have enough room to swing trade. Why? Because if you go long here, one tick above this bar, you should place your stop loss here or below this bar's low, right?
Yeah.
If I mark that,
Yeah, please mark.
let's say I put my stop loss one tick below this bar. If you see, this is much more than 1:1 risk to reward. So you have enough room for a swing trade.
Yes, correct.
So you can hold for a swing trade if you want to. If you are very much concerned about your profits, you can exit at a 1:1 risk to reward scalp. Why? Because this is a high probability setup. I guess you got your 2 hour profit, and if you wanted to swing, you could have gotten out there. Now, if you see the same thing which happened here, price broke out above the trend channel line here and then gave a major trend reversal attempt, but then it is still in a trading range. So you only scalp. Same thing is happening here. This is the trend channel line. Price is breaking out above the trend channel line against the trend channel line,
Yeah.
and price is also closing above the EMA strongly. 1, 2, 3 strong closing bull bars. The third bar is not so strong, but okay. And 1, 2, 3 bars whose low is not touching the EMA. So this is 3 bars, 3 moving average gap bars, which is signifying that bulls are strong. Okay. So what do you do now? This is a minor reversal attempt. So you have to wait for a test of the recent lows and then find a long setup. So now if you see 3 bars closing on their lows and also breaking below the EMA.
Yeah.
Can you short here and hope for a scalp down here? You can. Why didn't
Yeah.
I do it here? This bar was not closing below the EMA.
Yeah, correct. Here it is.
Yeah, and if you see this bar did close below the EMA strongly, that too. But then if you put your order to enter one tick below this bar, it never got triggered. Even if it did trigger, I wouldn't go. I mean, wouldn't take this trade because if I mark 1:1 risk to reward, it is somewhere here, but day's low is somewhere here, and you know that price is
Oh, it'll be
yeah.
within that range. So,
Yeah, so on the bottom third region, you only find long setups.
okay.
Here, it has space to this bottom third region, right? Or the
Yeah.
recent lows for a scalp down. So you enter one tick below this bar, put your stop loss here or here, and offer a 1:1 risk to reward. It did hit your target, but now if you see, are bears stronger than bulls here or bulls stronger than bears? 1, 2, 3 bull bar, and the
Huh.
third bull bar was a doji bar. Fourth bull bar was an inside doji bar.
Bears
Fifth
are
bull,
only strong.
yeah, fifth bull bar was not so strong because the range of the bar is so small compared to these two. But here, if you see, okay, 1, 2, 3 bars, the range is not all that great. But if you see 1, 2, 3, 4, 5, 6, 7 bear bars closing near their lows, which is signaling you that hey, I'm stronger than bears here. So don't try to trade me on the long side. At least wait for a second entry. So if you
Yeah.
get a bull bar here, I wouldn't enter. I will wait for another test of the recent low and then enter on a strong closing bull bar's high. If you see, that entry never came by, and we got around 10 or bear channel without any pullback. So this is signaling you that I'm much stronger than you initially anticipated. I'm also breaking below the entire day
Yeah,
range.
it is going below now.
Yeah, here if you see this breakout, this was the trading range initially. This breakout from the trading
Yeah.
range in
Yeah.
quickly reversed up. But here if you see, it's not reversing, right?
Oh, so it's
You're getting,
expected to go down. Something
yeah.
like that. Okay.
So you can enter here, put your stop loss here, and hope for a major move down, or you can wait for a pullback setup. Price has to give you a pullback structure and then try to go lower once, pull back again, and then try to go lower twice. That is where you enter. So this will be the end of the day review for 1 minute time frame at least. Why did I stop here is because if you trade 5 minute time frame chart, there are 81 bars, and on 1 minute time frame chart, if you trade for 1.5 hours, it is almost 81 bars. Okay, we will end the video here, and we will meet again on the live trade review. For people who are watching, you can find the link in the description below. Thank you guys.
Thank you.